Welcome to the Metals Investment Forum. First time in person in beautiful Vancouver. I have here Golden Mineral CEO Rehn. Welcome, Warren.
Thank you, Chen. Glad to be here.
Well, good. It has been a roller coaster year for gold, and you seem to be sailing along. You have the first mine successfully in production, on time, on budget. Can you tell us a little bit about that?
Yeah, the Rodeo mine's been great. The startup has gone very, very smoothly. We broke even on the project level in the first quarter. We broke even at the company level based on mine income in the second quarter, and the third quarter we're making money and paying all of our bills and putting more money in the bank. So we're very pleased with it. We're on track to meet the guidance of 12,000 to 14,000 ounces of gold produced during the year. And our cash costs are coming down to where we predicted they'd be in the mid $800 per ounce of gold net of the silver credit. So as you can see, it's quite remunerative, and we're making good money on the revenue that we're getting from the mine.
Okay, great. Can you tell us a little bit how much free cash flow you're getting from the mine at this current gold price? Obviously, when the gold go higher, how much leverage you have.
Yeah, at current prices, we're getting about $4 million a quarter. That's what we had in Q3, 4.2 million in net operating margin at the current gold price. So obviously, higher gold price, more margin.
Yeah, excellent. And then recently, you just have a discovery, a very nice discovery, 8 gram over 20 meter plus silver, and there's additional silver in there. So can you tell us where is the discovery and how important it is?
Yeah, so we were doing drilling around the existing Rodeo resource to see what the expansion potential would be. And that really great intercept comes from underneath the current planned pit. So it will drive the pit deeper and increase the size of the resource, which will mean we can mine it for longer. So we're looking, because it's such a profitable mine and it's going so well, obviously, if we can extend the mine life, it's great for the company and great for the shareholders.
Oh, excellent. So you already got the first mine into production, and then you're looking at a second, much larger mine. So can you tell us about Valerdania?
Yeah, so the big growth story for the company will be when we can put Valerdania back into production. Now, Valerdania, given the current resource and the current mine plans, has at least a 10-year life, based on the PEA that we published in 2020, and it's very attractive economics. It would produce, according to the PEA study, about 2 million silver equivalent ounces per year at a cash cost of around $9 per ounce of silver. Very attractive when silver is selling for $25 an ounce or more.
Excellent.
So yeah, great potential.
$9 silver, that's a credit, used on the credit, or it's a co-product, right?
That's so per silver equivalent ounce, and it's net of lead, zinc.
Lead, zinc. Okay. That's very good. So at the $20+ silver, we can see that there's a lot of margins.
Yeah, there's great margin, and that study, depends on having the BIOX facility, the bioxidation facility built and working to get the good gold credit, the gold payable from the deposit. The deposit has about half value in silver and half value in gold. And so we hadn't previously been able to get that good payable without the oxidation facility. Once we build that, we will. And so that's what drives those great economics.
Okay, great. So how much does it cost for you to get this project back to production? I know you already have existing mill there, fully working mill.
Yes, we do. So we have 2 mills right on property. One is the flotation separation mill to separate the mineral into the 3 concentrates. And the other is the oxide mill, the cyanide mill that we're using to process the Rodeo ores. And what we're looking to do here is build the BIOX facility to oxidize the pyrite concentrate before we extract it with the cyanide process at our cyanide mill. So the plan in the PEA called for about $6 million US to build the BIOX plant and about $4 million for development costs going into production on a sustained basis at Valerdania. I think the costs have gone up, obviously. You mentioned earlier today that inflation is driving a lot of changes, especially in the steel market. And so we expect it to be an increased capital cost, and we're relying on Outotec, who's the world expert, in designing these plants to finish the studies on specifically our concentrate with the detailed design of the plant and capital costs, and we'll have that early next year. Once we have that, we'll be able to make the decision. I expect it will go up a few $1 million for the capital cost, but it will still be within reach. And bear in mind, we're producing cash ourselves.
Yeah, exactly. You have 4 million each quarter. So what I hear you correctly, you have 6 million for the oxidation and then 4 million development costs plus the inflation, cost inflation. Maybe you in the low teens. How much cash you have right now? And then you're making about 4 million a quarter.
Yeah, so we have that as net operating income. Of course, we're spending some money as well out of that 4 million on exploration. But we have at the end of Q3, 8.8 million in the bank. That was a $2 million increase over Q2. So you see, we're building cash despite our exploration spending. So we project to have increasing along those same lines through the rest of the year and into next year. So we should have enough cash to cover it ourselves or potentially do a bit of leverage on the Biox plant when it's time to build it.
Right, excellent. You have a producing mine, you have a free cash flow, predictable cash flow. So that's always a great thing if you want to get some credit from the market.
Exactly. When you don't really need the money to borrow, you have money is easily available, and so we're looking at leveraging that a bit when the time comes.
Excellent. Finally, for the blue sky, shareholder has been waiting for Barrick to make a move. I heard they're getting really close to start drilling.
Yeah, so they put out a bid for drilling proposals to start either late this year or early next year. So I expect that they'll announce the start of a drill program in next year, early next year, and it'd be great to see because obviously they're looking for the big gold deposit on the El Quevar project. And they're carrying us along at 30% owners if they vest, and they have to produce a 2 million ounce size deposit in order to vest. So either they find the deposit or they give it back to us, and it has that great silver deposit on it. If
Right. Excellent. That's again the Barrick only looking for something over 5 million ounce or at least 5 million ounce.
That's their target. Yeah.
And then you will own at least 30% of them.
Yeah, exactly, which is a huge bonus for the company, obviously.
That's a big blue sky for a little company,
Great
little junior,
value.
like Grand Golden Mineral. Okay, great, excellent. You have any final words for shareholders, existing and the new shareholders?
Well, just pay attention to our ability to complete what we've proposed. We've done very well with Rodeo. We're going to bring Valerdania on once we have the details and get full board approval. And so, the track record that we started, I think will continue, and we can see sustainable, profitable production, and then a very strong pipeline of properties for future growth. So stay with us. I think we're doing quite well, and we'll continue to do even better.
Okay, great. Thank you. Good luck, Warren.
Thank you, Chen.